Hello and welcome to our presentation on why and how you can use family law software to help your clients who are dealing with divorce. We will see why family law software is used almost universally by all the leading CDFAs and other financial professionals who are helping people deal with divorce, and how you can use it to help your clients make smarter decisions and reach better outcomes. The key things that make family law software great and that distinguishes it from all other financial planning products are its extraordinary specificity and detail, its ability to work interactively with clients, its comprehensive and accurate handling of taxes, the fact that it is customized for the divorce situation, and its extensive suite of negotiation tools for divorce. As we explore the software, we will touch on each of these points, so you will see both how and why to use family law software to its fullest potential to help your clients deal with divorce. Let's talk first about specificity and detail. Divorce is one moment in people's lives when they want very detailed financial planning. This isn't, if we save 3% of our income each year and assume 7% appreciation, where will we be in 20 years? This is, given my exact income and expenses and taxes, will I be okay next year? You want the ability to enter full details, and family law software gives you that. You enter income and expense information, and assets and liabilities, and the software gives you complete information about current income, cash flow projections, and projected net worth of each party. This lets you answer questions such as, will I be okay next year? Or can I keep the home? Or will the savings I am left with be enough? Every calculation is explained. You can drill down on each report to understand exactly how each calculation is done. Also, the software has a very extensive ability to calculate the impact of liquidating assets. So if your client is drawing down his 401k account or selling securities, you can see exactly how much has to be sold in order to cover not only the gap between income and expenses, but also the taxes that need to be paid when the item is liquidated. You can count on family law software to handle these difficult questions automatically, and your clients can count on you to help them make difficult life decisions relying on these comprehensive calculations. Let's take a moment to see how you enter the information and where you go to get the results. You enter all the information on this Client Info tab. So you begin with background and child information. Be sure to open the drop-down for each party, and wherever you see 3 dots, click it to enter even more information. Next, you enter form information if you are filling in a financial affidavit for the client. If you are not, you can pretty much always skip that page. Next, you enter income and expenses. You'll see at the top that there are 5 screens for income and expenses: wages and deductions, wage-like income, real estate expenses, living expenses, and income from assets. Wherever you see this icon, you can enter a footnote, which will print with the software's various reports. On the Income from Assets page, there are 2 footnotes for each asset, one which will print with reports showing the assets, and one which will print with reports showing the income from the assets. Now let's look at the reports you can generate. Go over to this Reports tab, and to get to the reports for financial professionals, click More Reports, and then at the top, select For Planners. The reports on the screen are divided into several groups. The first group is Key Reports. These are the reports that you will use in most situations. Then we have Backup Reports. These are reports that give important general backup or information that may be useful in specific situations, such as if you are selling real estate or if you have a combined benefit pension you are valuing. Below that, we have reports that show the details of liquidations, one of which we saw earlier, and reports which show the details of tax calculations. Finally, we have the backup reports that show the reports that you will get if you click into any of the other reports to drill down. Let's take a moment and look at some of the key reports. This will also give you a way to understand quickly the kinds of things that you can use the software to help your clients with. The first report is going to show the impact of child support, spousal support, and taxes on the party's current income. So we see here that Pat has much more gross income than Shelley, but after child support, spousal support, and taxes, their incomes are much closer to being equalized. The next report shows a division of marital property. The software will show you how much of each asset each party is keeping and what the bottom line total is for each party. The next report shows projected net income after expenses and taxes at a very high level. We can drill down on this report to see incomes and expenses category by category, and we can drill down on each category to see details. As we saw earlier, we can do a similar thing for projected net worth, which I think of as the ultimate bottom line. The summary total spreadsheet puts net income and net worth side by side on one page. This is a great report for showing clients how net income at the end of a given year flows into accumulated savings and becomes part of their net worth assets. It's also great for showing clients who are spending down how excess of expenses over income translates into liquidation of assets over time. The next report is the budget report, which shows line item detail for income and expenses for the current year and any other year. It shows child support income for the recipient and spousal support income for the recipient and child support and spousal support expense for the payer. It also shows taxes, federal, FICA, Medicare, and state taxes, and you can very easily see the impact of taxes on the bottom line. The next report is the tax report, which shows the calculation of taxes in detail. This is a great report to use if anyone questions your tax numbers. Most of the other reports are variations, detail, or special cases relating to these reports. So once you understand these reports, you have a pretty good handle on the software. Now let's talk about how you work interactively with your clients to get and refine their data. We begin over here on the Files and Settings tab on the Open, Save, Send screen. We can always click the New button to create a new file and enter the data ourselves. If we want to do that, we can give the client paper data sheets and then copy the information that the client has entered on paper. But even better is to register the client for electronic data entry. This is completely free with the software. To do this, we click the Register Client button and enter the client's information. Then click OK. You will see a message letting you know that the client has been sent an email to register and begin entering his or her information. The client then logs into the client software, where the client can enter background, income, expenses for each party, and assets and debts. So here, for example, is the entry of wage and salary income. When the client is ready, the client lets you know, and you log back into your software. Then you click Open Online Client File, and you'll see the client right there. And you can see the information that the client has entered, and you can change that information. If you change the information, the next time the client logs in, the client will see your changes. You and your client are actually sharing the same data file. Now what if you reach a point where you want to continue working without the client making any further entries? Just go back to Files and Settings, Open, Save, Send, and choose to save the online client file under any name you like in the group of files known as Your Files. So now when I go back to Open, Save, Send, and I open one of my files, I will see the silver file right there, and now the client no longer has access. And that's how you can work interactively with clients, as long as you want to, and then save the file and work on it privately when you're ready to do that. The desktop software, which we are not showing here, gives you the same capabilities, but it's a little more complicated. In the desktop software, you first download the client's online file, make your changes on your desktop, and then upload the file back to the client. It's the same idea, there's just that download-upload step in the middle. Next, let's talk taxes. This is a moment when people want really accurate projections. When a client asks the question, will I be able to make it, you want to be able to give a definitive answer. Since taxes are such an important expense, if you were just estimating the taxes, you would not be able to be confident in your answer to this critical question. That's why accurate tax calculations are so important. When you look at the bottom line of the budget report and it shows a positive number, you can tell your client with confidence that yes, you will be okay. Or if you see a negative bottom line, you can tell your client that he or she has to make some very difficult decisions to cut expenses or find a way to increase incomes. Again, with confidence, as you help your client make these critically important life decisions. Either way, you can feel good that you know that you are helping your client make better decisions at this important moment, perhaps even preventing a bankruptcy filing later on. Line item detail on income and expenses is important, and an accurate tax calculation is also necessary. Family Law Software has a complete and accurate federal income tax calculation. It handles every tax bracket, the earned income credit, child tax credit, differential tax rates for capital gains, child care credit, and so on. We have pretty good estimates for state taxes as well. Let's take a couple of minutes and look at the various tax calculations so you can understand what's going on behind the scenes in this important part of the software. This is the tax report, which we call View Edit Taxes, for the current year. You get to this report by clicking the Reports tab and then selecting View Edit Taxes. It shows for each party the entire tax calculation, starting with every form of income, then adjustments, then itemized deductions, such as medical expenses, state and local income taxes, real estate taxes, and charitable contributions, then exemptions, then tax calculation, before credits and other taxes, then non-refundable credits such as the child care credit, then refundable credits such as the child tax credit and the earned income credit, and then other taxes such as the alternative minimum tax. So you can see just at a glance how comprehensive the calculations are. Then below the federal income tax calculation, you have other important federal taxes such as the calculation of the FICA and Medicare taxes and state income taxes. For many of these lines, where the line item itself is the result of calculations, you'll be able to drill down and see those calculations. So for example, I can click here and see how FICA taxes are calculated. Let's go back. I can see the calculation of the taxable portion of Social Security income. I can see the calculation of the deductible amount of mortgage interest. And this ability to drill down and see the detail enables you to have confidence in the accuracy of the calculations, enables you to give your client confidence in the accuracy of the calculations, and if it is a contested matter that goes to trial, enables you to give the judge and the other side confidence in the accuracy of the calculations. Now let's look at the calculations of state taxes. Completely accurate state calculations in 50 states is beyond the scope of what we can accomplish in the software, but we do have reasonably good estimates, and they're close enough that you can feel confident in the overall result. Note this link for income excluded from state tax. In various states, IRA income, defined benefit pension income, Social Security income, and unemployment income is excluded from income for state tax purposes. We have incorporated those exclusions for every state, and you can come here to confirm that we have incorporated those exclusions correctly in your case, or if for some reason there's a special circumstance in your case, you can change the exclusions. Let's go back to the state tax page and back further to the View Edit Taxes page. And now we see at the top of the screen that we can select taxes for future years, not just the current year. So how do we handle future years? There are two components of our future tax projections. One is annual inflation adjustments, and the other is law changes. We handle both of them. The software has built in an inflation component, which increases tax brackets, standard deduction, and all the tax items that are adjusted annually for inflation. The second thing is law changes. If the law currently has built into it provisions that are scheduled to sunset in the future, those sunsets are built into the software. So your long-term tax projections are also as accurate as they can possibly be. Let's see how you can change the key assumptions if you want to do that. Go to Files and Settings, select Settings, select Assumptions, and then you will see on this page two key assumptions that affect taxes. The first is the inflation rate, which affects the rate of increase of expenses and wages, and also of tax brackets and other tax factors. The second thing, currently, is the last year for personal provisions of the 2017 Tax Act. You can see that this act is scheduled to expire in 2025, and for tax years after 2026, we will revert to the tax laws as in effect prior to 2018 as the bill requires. But if you think Congress will extend these provisions, you can, with the stroke of a keyboard, extend these provisions to 2030, or if you think they will never expire, you can extend them beyond the range that you are calculating. To restore the software's calculation, here and anywhere, you click in it, click a pop-up button, and click the button to clear the override. Tax-accurate calculations are important in another tax situation as well, and that is where parties are liquidating assets. This can happen any time expenses are more than income. It can happen in retirement, or it can happen if parties are just spending more than they're earning. When this happens, Family Law Software will liquidate assets to cover negative cash flow. It liquidates assets in the following order. First, it liquidates accumulated savings that have been built up during the term of the software's projections. Then, it liquidates taxable securities. Then, it liquidates IRAs and 401ks. By the way, it is possible on the Assumptions screen to skip one of these sections. If you want to skip liquidating the taxable assets, for example, and go straight to liquidating the IRAs, you can tell the software to do that. In any event, when you liquidate assets, you incur taxes. So, for example, when you liquidate taxable securities, you have to pay capital gains tax on the difference between the basis of those securities and the amount they are currently worth. When you enter taxable securities, which the software calls cash and investments, you specify the value today, the anticipated rate of appreciation, and the tax basis. So for any future year, software will be able to calculate the anticipated value at that year and anticipated gain that would apply if the security were liquidated to cover expenses. In real life, if you are selling securities to cover expenses, and let's suppose that you're covering a gap of $10,000 in a given year, and your securities have some gain, you need to liquidate more than $10,000 of securities. You need to liquidate enough to cover both the gap and taxes that you have to pay on the liquidation. The software calculates this tax amount automatically. And it's not so simple of a calculation, because let's suppose that we have $1,000 of taxes to pay on our $10,000 liquidation. So we need to liquidate an extra $1,000 to cover the tax payment. But then we need to cover tax payment on that last $1,000. So it is an iterative calculation, and the software iterates that down to the last dollar. The way the software presents it to you is to show the total amount liquidated, then subtracts the amount of tax that had to be paid, and thus shows you the amount that is available to cover the net deficit. This amount then ties to the net deficit that is shown on the spreadsheet for net income or the budget report for any given year. The software even has reports that drill down and shows how those tax calculations are done, or for liquidation of financial investments or IRA and 401ks. Now let's talk about ways in which family law software is customized for the divorce situation. Unlike the standard financial planning product, family law software has built into it the ability to handle all of the situations that arise in a divorce, from selling a house, to child support modifications, to segregating separate from marital property. Child support and spousal support are calculated automatically in 23 states. In the remaining states, you calculate child and spousal support outside the software and enter those numbers in slots provided. The software is built from the ground up with the notion that there is not one financial plan, but there are two interrelated financial plans. Assets that are not allocated to one party are automatically given to the other party. The child support amount automatically increases the amount of income of the recipient and automatically becomes an expense of the paying party. This customization is another reason that you would use a special purpose product such as family law software in a divorce situation and not just use a typical financial planning product. When you are approaching a current or a potential client who is going through a divorce, the fact that you have a tool like this would be a reason for a client to choose you rather than some other financial planner who does not have this specialized tool. So far, we have seen how you start a case file, how you enter data, and how you understand the reports that the software generates and help your client understand them as well. There's one more really important piece of using the software, and that is using the software's negotiation tools to help your client arrive at an outcome that protects your client and that is as fair as possible to all parties. We're now going to take a look at each of the software's negotiation tools so you can see how they can help you help your clients. They're all found here on the Negotiate drop-down menu, and we'll go through them one at a time. The first one is called Support Impact. This one shows the impact of child support and spousal support on after-tax cash flow. So as we see in this graph, initially, Shelley has much more gross income than Pat, but after child support and spousal maintenance, you can see that their incomes are much more equalized. This graphical approach can be very helpful to help clients understand the extent to which child support and maintenance will equalize their situation. The next tool is Child Support What If. This allows me to ask what child support would be if various key numbers were changed. I'm going to add a scenario here, and I see that child support is $1,448, but if Shelley's income were only $100,000, then child support would be only $1,170. You can add as many of these scenarios as you like. The next tool allows us to ask what if about a variety of subjects. We can ask about child support, maintenance, exemptions, wages, etc. For example, I'm going to create a new scenario and say, what if spousal maintenance were $1,000 lower? I can quickly see the impact of this change on each party's income after taxes. Note that the child support amount has automatically updated to stay in sync because in this state, child support depends in part on spousal maintenance. Thinking about spousal maintenance, I can instantly see the amount of spousal maintenance it would take to balance incomes. That is, to have the two parties end up with the same share of the combined pot after taxes. So let's just say I want Pat to end up with 50% of the combined pot after taxes. It would take $1,300 of maintenance to get there. The next thing we can ask is present value. In the software, we have determined spousal maintenance of $28.13 per month for about 2 years. What is the present value of this? What is the buyout amount for that? I can click this checkbox and see instantly that it would be about $88,000. I can also divide assets between the parties. The yellow bar here indicates that none of the assets have yet been divided. I can enter a percent I want Pat to keep, a percent I want Shelley to keep, a dollar amount for Shelley, or a dollar amount for Pat. And however I do it, the software will update the other numbers and the totals. When I have finished entering assets initially for all the parties, the yellow bar will be gone, and I will see just the blue and green showing the parties' assets and debts. Now, if I wish, I can see how far the parties are from a 50-50 allocation. I can see that I need to give Shelley this much more, and if I do, the parties end up equal. Those are the key negotiation tools in family law software that can help you get parties to agreement more quickly, help them understand the impact of their decisions, and help you practice more efficiently, more effectively, and more profitably. So there you have it. Family law software gives you specificity and detail, the ability to work interactively with clients, accurate tax calculations, and of course, accurate financial calculations, finances that are tailored for the divorce situation, and an unmatched suite of negotiation tools. This presentation has shown you why to use family law software and how to use family law software to help your clients who are going through divorce deal with the difficult decisions they have to make at that moment. We hope this helps you use family law software successfully in your practice.